Okay. So question number 4 reads, he owns a footwear factory. He sells to all of the 3 local shoe shops. Okay. So he prepares his financial statements for 3rd April each year. At 3rd April 2023, the ledger account balances included the following. And these are the details that were included in the ledger account, right? These are some of the details that were included in the what? In the ledger account. So you have got 3 types of the inventory, opening inventories there. There is the opening inventory for raw materials, for work in progress, and for finished goods. So now, if you read through the question properly, you will find what is required of you. At the end, you are required to prepare a manufacturing account. Okay. How do you prepare a manufacturing account? This is very important, and you need this. Need to learn how to prepare the manufacturing account, which that we talked about already. Yeah, when I talk about the issues of when I talk about the issues of the format, I gave you the formats last time. So what I just want to show you now is an example. Yeah, and let's go through this very example. So how do we actually go about it? So let's start by answering the question like this. We need to start from the additional information and that we may understand the few adjustments that need to be made. Yeah, that will actually help us to come up with the right statement. So we have got the inventory at 31st April 2023. That is actually the closing inventory. And you have got 3, types of inventories, the closing ones, for the raw materials, for the work in progress, and for the finished goods. And then you are told that this same person applies a 50% markup to his cost of sales. And I will show you that the person just does the 50% of the cost, and the 50% of the cost is actually added to the 50% is added to the cost of sales to give you the sales revenue. And the 50% that remains is actually the gross profit. You will see that when we start doing that. So the idea behind the manufacturing account is just to establish the cost of production. This manufacturing account is basically prepared for the companies that are involved in manufacturing, okay, that are involved in manufacturing, those that manufacture goods, okay, they are the ones that prepare the manufacturing account. So let's go through this very same one. So I said that the first thing that you have to start with is to establish the cost of production. So the cost of production being divided into the prime cost and the prime cost, which is made up of all the direct costs, and the other one is the overhead cost, which is made up of the indirect costs. So we are just concerned with those, costs that are not that take place right in the factory. Okay, so let's have it. You write the manufacturing account. Okay, so you write the name of the person. This was Salman, manufacturing account for the year ended, manufacturing account for the year ended, 3rd April 2023. Okay, so we have got two columns always. We have two columns, and we have the raw materials consumed. We start with the cost of raw materials that were consumed. Cost of what? Of raw materials consumed. So let's write materials. This is the cost of material. Of course, the cost of material consumed. Under the cost of materials consumed, you need to calculate for it. That's what we said last time. Because the question does not give exactly that this is the cost of material that you have. You have to calculate for it. How do you calculate for it? You say that you start with the opening inventory of the cost of raw materials. So the opening what? Inventory. The opening inventory of raw materials. Let's get back to the question. What is the opening inventory of raw materials? Anyone turn on your mic and just share the solution. What is the opening inventory? Zaid?
Yes, sir.
Yes, what could be the opening inventory of raw materials?
Isn't it $8,190?
Right, so $8,190. So that's the opening stock. Okay, this is the opening cost of raw materials, 8,190. And to these, we add the what? We add the purchases. Very easy. Add the what? The purchases. The purchases of what? Of raw materials. How much is the figure for the purchases of raw materials, Aris?
What's up?
What could be the purchases of raw materials? The costs.
78,420.
Okay, 78,420. 78,420. Right. And once we do this, then we can just add them together. And how much do we get? This is in the last column. You should be able to get 86,610. And from this, we can less now the closing. Let's less the closing what? The closing inventory of raw materials, of course. The closing inventory of what? Of raw materials. And we can have the closing inventory when we check. Let's go back here. We consult from our books. Do I have Paul? What could be the closing inventory of raw material? Hello, are you in class? What could be the closing inventory of raw material?
So I'm not sure.
Okay, check under additional information. The period you are considering is closing on 30th April. So what could be the inventory at 30th for raw materials?
48,690.
Check under additional information. There is a part which says inventory at 30th April 2023.
Yes, there's no value.
Are you able to see the additional information?
Yes, but there's no value for inventory as
For raw materials.
April. Yeah. Huh?
You can't see raw materials.
Oh, 8,000.
Yeah. So that's the closing inventory of raw materials being 8,000. So we can less 8,000 being the cost of raw materials. And you should remain with 78,400, 610. 78,610, right? So
Sir,
this
all this is going in the last column.
Yes, all this is going in the last column. This is now the cost of what? Raw materials. And to the cost of raw material, we can add now direct what? direct wages, and direct expenses. Let's go to the direct wages. Direct wages are factory wages, okay? Those that take place in the factory. Okay, what could be the value of the direct wages? The wages that go in the factory, they are the ones that, you know, okay. So direct wages. So we have got the factory operatives. That's direct wages, right? The factory operatives, because the supervisor is an indirect cost. Yeah, it's an indirect cost because the supervisor is supervising the people that are working in the factory. Then those people that are really doing the work, their salaries refers to the direct wages. So 52,396 for direct wages, being 52,396. Okay, for
So I have a
direct
question.
wages. Yes, sir.
Can we differentiate between direct and indirect wages?
Yes, the indirect wages are those that the wages that you make on those people who are not directly doing the work. Okay. For example, the supervisors. Supervisors are not, for example, you are, let's say you are what work are you doing as a company? Let's say you are okay, you are giving some services. So you have the actual people who are doing the services, and then there are those people who are not doing it. Okay, let me give you an example for school, like the school. There are teachers are doing the work, they are handling the students, they're providing service. Then there are people who supervise teachers. For example, the head teachers, what. Those head teachers, like, they are not doing the actual work that the company is standing for, you get. So it's indirect labor. But the salaries for the teachers, because they're the ones that are doing the work that you're standing for as a company, is direct wage. You got it?
Yes, I got it.
Yeah. Then from here we can now add the factory what? Overheads. Now, when we say factory overheads, what we are referring to are those indirect costs that take place in the factory. The indirect costs that take place in the what? In the factory. By the way, this value is the value of the prime cost. The prime cost. Prime cost is referring to all these direct. Now, let's start with the indirect ones. We have got the factory wages of supervisors. Let's just write the wages of supervisors. Okay. Supervisors, their wages is not direct. And this should be actually written in the second column, not the last column. Okay. This comes in the second column. And let's have, so you've seen the cost for supervisors, right? The cost for supervisor is 27,500. Okay, the wages. So let me write it in ready. 27,500. It is in the first column, sorry, not the second column. Then the rates, okay. These are indirect costs. The rates and the rents now. Rent and the rates. What are you being told about the rents and rates? Let's go to the additional information. This is very important. Okay, the rates and rentals. What is being said? You've seen adjustment number 3, like additional information 3. It says rates and insurance are to be apportioned 3/4 to the factory and 1/4 to the what? To the office. Pay attention. What goes to the factory is what we are interested in. You get the point? We just want what goes in the factory. We are dealing with the manufacturing account. But what goes to the office goes under what? In the profit and loss account. Okay, it doesn't go in the manufacturing account. So it is just 3/4 of this, which is 3/4, right? 3/4 is the same as 3/4, or 75% if you may like. So 75% or 3/4 of the cost for rent and insurance. Okay, where is rent and insurance? You've seen it's 17,528. Rates and insurance, 17,528. Now 75% of that. So you do 75% of that. 17,528 now times the 25%, or times the 75%. Okay. What that gives you is it's only that I don't have enough space where I'm writing. When you do that, what that will give you is actually 13,146. This should be in the first column. Okay, it should be in the first column, right in the first column. I'm doing this for the sake of space. It should be in the first column, this figure. We come to the factory electricity. Something is said about factory and electricity, and we go down to the adjustments. Let's just check what is being said. Okay, factory. We are told that what is being said about factory electricity. Additional information. Do we have any additional information about electricity? Oh, it is there. You've seen? It says at 31st April 2023, factory electricity of 1,048 was unpaid. You get? It was not yet paid. These are accrued expenses, okay? These are accrued costs. So you have to add this amount to the one that we are adding for factory electricity, to the one for factory electricity, 11,442. We should add the unpaid, which is accrued, right? The accrued expenses. So we are adding this 1,048 to 11,442. So 11,442 plus 10,000 or 1,048. When you add everything, you have 12,490. This should be in the first column. All these figures should be in the first column. Yeah, I'm just doing this because, yeah, of the space, just as I have told you. Right? So when you find this figure, what you are to find now next is general expenses. The general expenses. Obviously, the general expenses are given in the question. General factory expenses are given 8,244. 8,244. It's in the first column, 8,244. Yeah, just in the first column, the very first column. And we need the depreciation. We need the depreciation. We need depreciation. Okay. And the depreciation of the equipment is said to be additional information number 5. It says factory equipment is depreciated at 20% per annum using reducing balance method. And you know that when you are reducing balance method, you calculate this percentage on the costs, right? On the net book value. So what you do the net book value. So how do you get the net book value? Go to the costs of equipment. Factory equipment at cost, you've seen. Factory equipment at cost is 90,000. Then there is also the provision for depreciation from the previous period being 43,920. So you should subtract the 43,920 from 90,000, which is the cost. So it's cost minus the provision for depreciation from the previous period. What you remain with is what you're going to multiply by what? By 20%. The net book value. So that is what happens. I'm saying that you can say 90,000, of course, minus 43,920, everything times what? 20%. Okay. Whatever you find, what you find actually, not whatever you find, what you find is is 9,216. All these figures are in the first column. Then when you reach here, you can just add everything. And whatever you add, the value that you find, you push it in the last column. That's the figure that should be in the last column now. Add everything like this, add these. All these that are in the first column, not this one, not with this one. This one is in the last column, okay? The 131,006 is in the last column, but I mean these that are in the first column. Add all of them, and then their value, their figure is what you push in the last column. I am going to erase here and continue, okay? I am erasing here and continue, but you continue writing, because me, I'm just doing this just because of space, okay? Just because of space. So when you add all these figures and push the value, in the last column, the value that you find is 70,596. So actually it is this value, to this value you add this 131,006, like this one. So you add this is in the last column, right? You add to this value that you push in the last column, and you get 201,602. Okay, this is in the last column. Everything is now in the last column, not the first, but the last column. When all that has been done, what is it that we are going to do now? We are going to add to this value. We need to add opening what? Work in progress. Opening work in progress, right? Opening work in progress. Opening work in progress, you can find it. Have you seen like the inventory at 1st May, the one that is labeled opening work in progress? That is work in progress, okay? That is the one. 1st May, which is the opening of the period. Then there is work in progress. There are 15,200. That's the one that we want. So 15,200. And then we add to this 200. We are in the last column, by the way. Everything is now happening in the last column. You have 216,802. And then from this amount, we can less what? Closing work in progress. Closing what? Work in progress. Less closing work in progress. When you check the additional information, there is inventory at 3rd April, like the last period, okay? The last period, like under additional information, at the end of the period, there was again work in progress, which was the closing. It was 16,100 under additional information. That is what you write. 16,100. And when you subtract this from the amount, you will have, the cost of production being 200,702 as the cost of what? Of production. It's called the net cost of production. Why do you call it the net cost of production? Because if you never had the opening work in progress and closing work in progress, this one would have been your gross costs of production. Yeah, and then this will be the net cost of production. But Since we don't have that, you can just leave it as a cost of production, just like that. So this is where your manufacturing account ends. When we come next time, we have to start from here to find we'll find from this last figure, this cost of production that we have found, okay? We will start from here and find and answer the other part of the question. This is just about the manufacturing account that we needed to answer now.